Well, a lot of thoughts going through my head right now. For Friday, October 4th, 2019, my name is Evan. This is the McChronicle, where the future starts today. First topic I'm going to cover, I floated this on Twitter yesterday. Now again, to be clear, this isn't my base case. I still believe the Bank of Canada is only going to do one rate cut by year end. But I'm starting to float the idea the Bank of Canada does two rate cuts by year end. And here, I'm going to give my reasoning why. Well, first, the current headwinds. Consumer insolvencies been ticking up year over year since about the middle of last year. Consumer spending growth been very weak. Wage growth, paycheck growth, been very weak since the beginning of last year. We always got the headwinds in construction, with housing starts being down in BC from the declines in the Vancouver housing market. Same's going to happen soon here in Toronto also. There's obviously that headwind. Because of the global economic slowdown that we're in right now, that I think is going to morph into a global economic recession. But a great chart that Capital Economics put out here this morning. Non-energy exports remain very weak and are about to tick lower. So put all this in context here. And also remember, the US Federal Reserve is about to cut interest rates again this month and have cut for the third time this year. It was funny when I was actually thinking about this. Raoul Paul from Global Macro Investor and Real Vision has been saying for some time now that the US Federal Reserve is going to cut 100 basis points by the end of this year. Well, cut in October, they're already at 75. There you go. The ECB has gone back into their QE infinity cycle. Australia has done the most cuts of anybody amongst other central banks, and this easing that's going on globally to combat this slowdown that's morphing into a recession, no matter what central banks do. But that's here nor there. So with all this in mind here, and the fact that the headwinds look even worse going forward, is the Bank of Canada not going to have a choice? So again, I'll throw that out to you. With the current headwinds in the Canadian economy and what's gone on in the global economy and other central banks already starting their easing cycle throughout the world, is the Bank of Canada going to have a choice? It also can factor in that the headwinds look even worse going forward. But anyhow, is the Bank of Canada going to be ultimately be forced to do more than one rate cut by year end? I'll leave that question to you guys. And the second thing I wanted to cover today, I wanted to give a brief synopsis on the US non-manufacturing PMI that came out yesterday and the jobs report that came out this morning. First, the jobs report. Yes, I'm aware there was an upward revision to the last 2 months. As I say in this tweet here, it was all government jobs, so buyer beware. But look below the surface. Hours worked, unchanged. Year-on-year wage growth, slowing. So the same factors that are happening globally right now, the US isn't immune to. And look at the non-manufacturing PMI yesterday. Its lowest level since 2016. Manufacturing led, as it always does. The rest is following now. And look at the subcomponents within it. Business activity, slower. New orders, a leading indicator by the way, slower. Employment, also a leading indicator, slower. So moral of the story, the US, along with the rest of the globe, is slowing down economically, which I think is going to morph into a global recession. The yield curve has been telling us this for months, and as data looks slower and slower the further we go on, it's looking like we're heading in the recession path now. And the last story I wanted to cover today was give you an update as to what's going on in the US Federal Reserve repo market, Now, things have calmed down the last couple of days. I don't think they're done yet. And I'll give a big reason here why. Year over year through June, JP Morgan saw a 57% decline in cash at the Federal Reserve. And JP Morgan says that the Federal Reserve did the right thing by injecting that money into the repo market when we had the rate spike towards the end of last month. And then this headline comes out from Zero Hedge yesterday. WeWork in talks with JP Morgan to head off cash crunch. Now, I've been saying since this whole thing happened that China was a big reason why, and the events that were happening with the liquidation of real estate globally, and that was the big reason why we saw a repo rate spike. In light of this information, yes, I do think China is still involved in this, but I think it's safe to say now, without any more information coming to light on this, that it was a combination of China and the venture capital market being a canary in the coal mine. So my opinion, it looks like a combination of the two. Excellent place to go ahead and leave it. Smash that like button, leave a comment, subscribe, follow both my Twitter accounts. And as always, my name is Evan, this is the McChronicle, where the future starts today.